Hello, my name is Anthony Sinclair and I'm from GNS Group Financial Planning. Today I'm talking about the importance of setting some goals, coming up with a strategy that's making you achieve those goals, and then most importantly, measuring the results. The other most important part is to make sure we do protect your lifestyle. So you work hard to achieve your goals, but then making sure that you have the insurance in place that would make sure that your family is not financially disadvantaged should illness or injury beset you. So here's our presentation. Thank you. Thank you, David, and thank you everyone for joining us this morning. My role at GNS Group is as a financial planner, as David said, and most people will remember my tagline each week. I create wealth and I protect lifestyles. So that's what I'll talk to you today about, is growing your wealth and also protecting your lifestyles. Now the most important part to start with is to know where you're starting from. And for most people that is a matter of setting goals. So everyone's got their texters. We need to set some goals. Okay. I'm just going to pass around a balloon to everybody. And what I'd like you to do is to have a bit of a think about what your goals are and then just write them down on the balloon. So your goals could include anything from paying for children's education, paying off the mortgage, there's two there, paying off the mortgage, going on a holiday, retiring with a comfortable lifestyle, buying a new car, expanding your business, looking for new opportunities. There's plenty of different things that people do have as different goals, and there's no right or wrong answer. It's a matter of just making sure what's going to be right for you and your situation. There we go. Thanks. There we go. A couple of spares. So hopefully you can come up with a few different ideas of how you can help to grow your wealth and also some opportunities of where you may need some assistance. And that's where the role of the financial planner comes in. So I can help to just frame these ideas, and this is just part of the tools that we go through. People think it's a bit sort of strange that I have a bottle of helium in my office, and the reason for that is to do this. No, you can't suck on the helium. And so it's just a different way of trying to approach things to get people to think about their situation. Because a lot of time people have ideas about what they're wanting to achieve, and they'll put those ideas into their mind, and that's it. They won't write them down. And so putting them down on pen and paper is a great starting point. Putting on a balloon is just a little bit something different. So hopefully people can come up with a few ideas. And I might just go around the room and ask a few people for one or two things that they've listed on there. So perhaps Angelina, what have you got something on there?
Europe next year for 3 months with Mum and Dad.
Yep. And have you got an idea of how you're going to be able to fund all of that and take the time off work and things like that? Yep. Very good. Jackie, can I ask you one thing you've got on your balloon?
One thing, eventually get my own clinic. So
yep.
Obtain my own clinic with my own receptionist and all that sort of thing.
Yep. Fantastic. Sean, can you tell us one thing off your list?
Yep. I would like to expand my online passive income avenue so I can sleep in.
Sounds good. Leanne, can you tell us one thing off your balloon? Yep. Fantastic. Sally?
Working with multinationals.
Yeah. Very good. Mario?
I'd like to expand the business but actually have more time off as well.
Most people would like to have some time off.
That's my...
Chris? Having enough for retirement? So as you can see, a real sort of variety of different sort of needs and goals that people are trying to achieve, but the important thing is how are people actually going to get there? And so that's what we want to do now, is just trying to sort of come up with a few ideas of how you're going to get there. The financial planner might start off with where you actually are. So it's a matter of looking at your current financial position, and it's also then taking into account what your capacity to save is and how quickly we can get there as well. Because for some people they may only have, say retirement might be a short-term goal because they might be in their late 50s. And so suddenly trying to come up with some ideas of how to quickly increase the amount of wealth that you have might be something more important. Somebody who's younger might have a longer time to retirement. They can afford to take a longer term approach to things, and there's some different strategies that you would employ. when it comes down to things like businesses and things like that, people often want to try and get more work-life balance and more time in their day to spend with their family and their friends and not be a slave to their work. So it's a matter of making sure that financially you can support that and achieve all those sort of things. So that's the way that we sort of approach it. Then it's a matter of recommending the right investments to achieve those outcomes. And that's the idea of a financial planner, is to go through, work out what's an appropriate investment for you to start with, and then we keep track and monitor that. And it's a bit like David was telling us earlier on with our statistics for the chapter. We need to make sure that we're going through and devising a goal. Then we need to make sure we have the strategy in place to achieve it, and then we make sure we do monitor that on a regular and ongoing basis. Without doing those 3 steps, you will never achieve your goals. You're basically a rudderless ship heading off in the night. You don't know where you're going to end up. You're just hoping that you're going to end up in the best place possible. But it'd be much better off if you had a strategy of how you're actually going to achieve that. So that's in terms of setting goals and building wealth. The next part I'd like to talk about is actually just protecting lifestyles. And so usually the conversation will then start to drift from all of these things we've just been talking about in terms of goals and start to look at things like insurance. So as David said, I did have a mannequin until yesterday in my lounge room. I'd like to introduce you to her today. It looked even more strange when I was bringing it in this morning about 6 o'clock. So a couple of things that I wanted to talk to people about was just about their insurance needs, and then making sure that people do have the right amount of insurance in place. And it's all to do with trying to protect your lifestyle. And there's so many things that do happen to people. So I just wanted to run through some of the statistics. In terms of asthma affects over 10% of the population, and they'll actually take time off work as a result of it. So we need to make sure that if that's something that's going to be of concern to you, that you are taking protection against that. So we've got 10% there for asthma. For females, breast cancer affects 1 in 11 people during their life, and depending on your age, there's different percentages, but basically 1 in 11 is the equivalent of 9%. Heart attack. Heart attack after the age of 40. The statistics are quite alarming. For a female, it's 33% of the population over the age of 40 will suffer a heart attack. For males, unfortunately, it becomes 50%. So they're quite big sort of numbers there. Heart attack and bypass surgery goes sort of somewhat hand in hand. 6% of the population will have bypass surgery during their lifestyle. Cardiovascular disease in the last 3 years accounted for 35% of all deaths. So it's a very big sort of number. So we want to make sure that we are protecting against that. Mental illness accounts for 25% of time off work for females and 16% for males. So that in itself is quite a big number. And these days, a lot of people are suffering more and more from depression and anxiety and things like that. And there's much more awareness about mental illness now. And so there's not so much of a stigma about it. So people are willing to take advice and preventative measures when they're necessary, which is a really encouraging thing. But it's a matter of making sure that if you're taking that time off work, you are protected against that. So for females, it was 25%. High blood pressure, that affects 10% of people as well. So we need to make sure that we've got our blood pressure in check. So we get our checkup. And the most alarming part is also about cancers. So 33% of males will suffer a cancer scare and 25% of females as well. So making sure that you've got insurance in place to cover those things is also important. So as you can see, there's quite a few things there that are concerning. So I might just run through a few of them. So in terms of the breast cancer to start with, that's 1 in 11, so that's the equivalent of 9%. So unfortunately, Chris, your goals weren't achieved because you didn't have insurance in place and you've just had a time off work because of your asthma. Sally, sorry, you're in the same situation as well. And so that was an important lesson for those people that their families have now suffered a loss. So we've worked hard to try and create some value in terms of their portfolios, but because they don't have the right insurances in place, you don't actually end up achieving all of your goals. In terms of mental illness, Angelina, sorry, you're a bit crazy as well. So is Darren, so we'll get rid of Darren as well, and so is Ray. So without having the right amount of insurance in place, those people haven't been able to achieve their goals either. In terms of breast cancer, it affects 1 in 11, so that's 9% of the population. So, sorry girls, both of your goals have just been snuffed out. In terms of cancer, the cancer was affecting 33% of the population, so again, that's 1/3 of everyone in the room.
He's really enjoying this.
I am. No, well, see, the important part is that, unfortunately, that we've only got a handful of balloons left, and they're the people that have had the right amount of insurance in place to protect their family and their lifestyles, that they've worked hard to achieve things, and they don't want that sort of little prick to come along and just pop your balloon. So a few more quick stats. 1 in 3 Australians will be off work for more than 3 months. So out of that room here, there's about 20 of us in here, so 1/3 of us will be off work at some stage for more than 3 months. If you are off work for more than 3 months, statistics also tell us that you're most likely to be off work for 4.2 years. So people think that I need to have enough, sick leave accumulated, or I've got a few thousand in the bank that'll tide me over for a little while. But if you are off work for more than 3 months, you're most likely going to be off for more than 4 years. Less than 5% of Australians have income protection insurance. Now, income protection insurance is not that expensive. For most people, it's less than 1% of your salary. So we spend that easily on our car insurance each year, on our house insurance. But taking out things to protect our family and our lifestyle is something that people don't often consider, and unfortunately only 5% of the population actually do take that out. A few little funny statistics for you. 543 Australians were admitted to hospital in the last 2 years for opening beer bottles with their eyes or their teeth. 104 could be. 142 people were injured trying on a new shirt that still had the pins in it. 2 people each year die from watering the Christmas tree whilst the lights are still on. 31 people in the last 3 years, so that's 10 a year, died from eating a Christmas decoration they thought was chocolate or candy. And 3 Australians die each year from testing a 9-volt battery on their tongue. So it doesn't have to be the normal things that people think about. All these statistics about illnesses and things like that are all just things that are somewhat beyond our control. Some of these more silly things are things that people are certainly in control of, and unfortunately people still get injured as a result of it. Only 50% of accidents happen in the workplace, so work cover doesn't cover you when you're at home, when you're falling over the stairs and things like that. Just quickly to wrap up, it does happen to everybody, and even happens to celebrities. And so I just want to run through just a couple of quick celebrities that have suffered trauma claims in the last little while. Barry White has had a stroke. Mr. T has had cancer. Daniel Johns has suffered from arthritis. Dowda Goodrum had Hodgkin's disease. Hazel Hawke had Alzheimer's. Kylie Minogue breast cancer. Michael J. Fox Parkinson's. Wayne Goss a brain tumour. Christopher Reeve tetraplegia. Simon Hawken motor neurone disease, and Patrick Swayze pancreatic cancer. So it's not just your normal run-of-the-mill mum and dad type clients that we deal with most of the time. It does happen to celebrities as well. So the important thing today is to make sure that you are setting your goals, you have a plan of how you're going to get there, you measure your plan to make sure that you are on track for success, and then most importantly, you have the insurance and protection in place to make sure that you do achieve those goals. Otherwise, you and your family will be financially suffering. So my name is Anthony Sinclair from GNS Group Financial Planning. I'm building wealth and protecting lifestyles. Do we have any quick questions?
Is income insurance?
Yes.
Looked at it in the past, and you said that people are often called they run the risk of being off for 4 years, but income insurance usually only covers you for, say, 6 months or...
No, not true. So with income protection insurance, all the terms are variable. So you can determine the waiting period before you're eligible to make a claim, and then also what the benefit period is. Now, a lot of superannuation funds will have a default amount of income protection insurance in there, and the standard terms are you need to be off work for 60 or 90 days to start with, and then you have a benefit period of 2 years. I usually recommend most people take out income protection insurance, depending on how much cash they've got saved up, wait as long as you can afford to. But for some people, it may be, say, 30 days that you can wait, and then always make sure that you're taking out your benefit period until age 65. Because what if you have an accident that you can never work again? What's the point of getting your salary for the next 2 years? That's going to be insignificant for most people. You need to make sure you've got the insurance in place all the way through to age retirement. So taking out a benefit period to age 65 is really important. The other thing is also that, let's say you were off work for that whole period of time all the way up until age 65. What happens when you do come to retirement? You've got no money inside your superannuation fund. You can actually have your insurance company, as part of paying out you the benefits, to actually put the 9% compulsory super in there for you. So when you do get to retirement age and the insurance premiums, insurance benefits stop coming through, you've actually still got a somewhat of a sizable nest egg sitting inside superannuation that you can tap into. And if anyone else has any other questions, please send me either after the meeting, or otherwise you know where to contact me. So thank you very much for today.
Thank you.
Hopefully you've enjoyed today's presentation. My name is Anthony Sinclair and I'm from GNS Group Financial Planning. We build wealth and protect your lifestyle. For more information, you can contact us via our website, which is www.gnsgroup.com.au, or give us a call on 9499 7444. Thank you.